Hello, Realtor. Hello, Realtors. Welcome to the webinar today. We're fortunate to have Director of the South Carolina Department of Insurance, Michael Wise. Michael is a South Carolinian, a graduate of Furman University. And he spent most of his career fostering a well-functioning insurance market that benefits consumers insurance alike through fair and responsive regulation. Prior to his appointment as Director of Insurance, he served as Deputy Director of the Actuarial and Market Service Division, responsible for actuarial analyses, policy formation, and rate reviews in the monitoring of traditional insurance markets. He's been an active participant in the National Association of Insurance Commissioners in their meetings and initiatives. Like I said, he went to Furman. He's an associate of the Casualty Actuarial Society and a member of the American Academy of Actuaries, and is a recent graduate of the South Carolina Executive Institute. Director Wise is also a recent recipient of the American Academy of Actuaries Rising Actuary Award. Director Wise married and has 2 kids and lives in Richland County in Columbia. So Director Wise, thank you for joining us on this very important topic. I'll turn it to you. We'll have questions at the end for issues that aren't covered in his presentation that the Realtors want to ask. Thank you.
Good afternoon. Thank you for that introduction. I'm Michael Wise here at the Department of Insurance. So a couple of things that we'll talk about. Some maybe aren't as pressing for you day to day, but one that we will get into is coastal property market, and we'll kick it off with that. So the coastal property market is experiencing difficulties countrywide. We are fortunate that we are not in the spot that some other states are. California, Florida, Louisiana in particular have had a lot of large carriers, a lot of the name brand ones that advertise on TV. As I say, I try not to say individual company names, but they have stopped writing new business in a lot of these other states. Part of that is due to catastrophe risk, whether it's wildfires or hurricanes or tornadoes, or other things. And so they've also had difficulties at times with the regulatory environment in other states. That's not been the case here. We have very good relationships with our insurance companies, but so the whole country's seeing some issues, whether it's affordability of coverage or availability. So this is driven by several things. One is natural disasters that impact the U.S. and other parts of the world. So the reinsurers, they sell insurance to insurance companies. They operate globally. So if there is the earthquake in Morocco, or a hurricane that hits the Atlantic coast, or a typhoon off the coast of South Korea, whatever it is, reinsurers are going to be impacted by it. They will see losses that come from the insurance companies that they reinsure. And so whenever reinsurers lost money, as they have recently, they raise the cost of reinsurance coverage to those insurance carriers. So we're seeing that impact premiums for our consumers here in South Carolina. And so we've also seen some reinsurers and their investors say, you know what, we're not going to write as much as we used to. And so they pull back what we call their capacity. And so it's harder to get reinsurance as well, which with supply and demand, that also impacts reinsurance cost. We've also seen rating agencies like AM Best downgrade carriers for a variety of reasons. We have seen inflation certainly hit. So we have anytime, property values, of course, and so those go up, and so more coverage is needed. So that's one way rates are impacted by inflation. You've also got just your repair costs. So whether it's labor, lumber, any materials cost to repair any kind of damage that happens to a property, to a structure, it just costs more than it used to. So we have seen insurance premiums rise, especially along the coast in our state recently over the last couple of years. We've also seen some coastal insurance carriers exit the market, largely due to insolvency. So that's something that essentially insurance regulation exists historically to ensure the solvency of insurance carriers. So you certainly wouldn't want to have a claim as a consumer and have this insurance product or policy, and whenever you need to use it, not be able to obtain the payment from the insurance company because they don't have any money. And so that's a big part of what we do as the insurance regulator. And so we've seen some carriers based in other states, particularly Florida and Louisiana, that operate in our state and provide coverage. They have gone insolvent, in large part due to the reinsurance cost increases due to storms. So some of those hurricanes that hit Florida put a couple of companies out of business. And so those companies exited our market at that point in time. Thankfully, for the most part, we were able to work with other companies, most of them new carriers to our state, to transition that business over. So policyholders were not left with no option. So they had an option for coverage to finish out the remainder of their policy period or to start a new policy period. And so we're certainly thankful for that and our industry partners stepping in and helping our consumers in a time of need. And then we've also got the South Carolina Wind and Hail Underwriting Association. For those that aren't aware, that is the insurer of last resort that exists along the coast in certain areas, largely to the east of Highway 17, and it provides coverage for individual wind and hail coverage for individuals that can't find it elsewhere. And so what a policyholder would do if they can't find a full coverage policy with wind and hail along the coast, they would write everything excluding the wind coverage with a typical insurance carrier, and then they would get a policy from the Wind and Hail Association for that wind and hail coverage specifically. So we have seen carriers increasing their rates. So with homeowners products, those carriers have to file for rate increases with us, and a lot of that is due to the reasons that we talked about earlier. So higher reinsurance costs, inflation. We've seen significant rate need. We're working with those carriers. We have a lot of conversations about how they can get to where they need to be what we say rate adequate, to charge appropriate rates that are not by statute inadequate, excessive, or unfairly discriminatory. And so we work with them and we try to get them to come up with a plan on how they're going to address this over time and stair step it. So if they do need a 20 or 40% rate increase, maybe they take 10% one year and then 10% the next year or something along those lines to try to get up to where they need to be over time, try to balance affordability from the consumer standpoint with the needs of the company. And a lot of carriers have been great about working with us on that. And we certainly appreciate that. And so some other things that we're doing is we've seen, some strain on the coastal property market. So there are fewer carriers offering coverage than we'd like. We think that competition is key to a good insurance environment and a good insurance market. And so we work to identify quality insurers that maybe aren't operating in South Carolina, but are operating in other coastal southeastern states. And we say, well, why aren't they here? So let's talk to them and see if we can maybe recruit them to come over and write some business in our state. Sometimes it works and sometimes it doesn't, but you never know if you don't try. And so we recruit those carriers. We also are looking at new companies that come into the market. And we have, after those insolvencies that happen, we've changed some of our requirements. We've limited premium writing. So if a new company comes in, we might ask them to limit the amount of premium that they write in the state that first year to a couple $1 million, see how it goes, test their waters a little bit, get used to what our market's like, make sure their rating plan is functioning appropriately. If there's something that they're underpriced on and they're selling a lot of it, they could be excited about the growth that they're seeing, but at the same point, the bill will come due when claims come in, and if they're underpriced, then they will be losing money. And we want to make sure that they don't grow rapidly before something like that happens. In the insurance industry, one thing that over the years regulators have found is that there's one thing that insolvent carriers have in common before they go insolvent, and that's rapid growth. So there was some kind of issue and they tried to grow their way out of it, or they didn't realize it was an issue and they were excited about selling more policies. And at some point it came up that they were growing too fast for a bad reason. And it led to their demise essentially. So that's one thing we look out for. We also require a certain amount of money on deposit for our state, for South Carolinians. And so there are minimum statutory amounts. And so we've asked companies to provide larger amounts. We asked one company to put $8 million on deposit for South Carolinians. So if they were to go under, then policyholders in our state have access to that money to help pay for any claims that are outstanding. So it's just, those are just some of the examples of measures that we've taken to try to limit the risks to our policyholders whenever we allow those new carriers in. And so it is a balance, but that's some of the things that we've been doing. But so with consumers, what we always advise is that they speak with a trusted insurance agent, ask questions. Different policies have different coverages based on the company. They can shop around for better rates. there's not a one size fits all kind of approach with insurance. And so we encourage policyholders to, read their policy, understand what's covered, what's not covered. Again, talk to that agent, especially if they have a question about a potential claim. And so it is something that we just cannot stress enough. But there are things that you can do to adjust your premium. One is your deductible. So if you have a $1,000 deductible, then maybe you could save some money by moving that up to a $2,000 deductible. But that might not work for everybody. So it just depends on each individual's financial situation. But beyond that, we always tell consumers, reach out to us. We have an Office of Consumer Services that is staffed and ready to help all week long. We certainly want to educate, and if there are complaints about a situation or maybe just not understanding something that's happening, we can certainly talk to consumers. Well, we can't give advice necessarily, but we can provide helpful information, answer questions. And again, if there's some kind of complaint or issue with an insurance carrier or an insurance agent, anybody in that chain, we can see what we can do about that to help a consumer. Another initiative we have with, speaking of consumers, is we are trying to get out to all 46 counties. That's an initiative that I started this year, and when I first told staff about it, I said I want to get to all 46 counties. Let's get there in person. Let's answer questions, whether it's property insurance, Medicare supplement, whatever it is, and address some needs of policyholders and consumers in our state. Let them know we exist and that we're here to help. And I said, let's do all 46 counties within that first year. This year, let's do it, 2023. I was excited, and then I was reminded, we only have so many staff, so let's tamp that down a little bit. And so they convinced me to do it over a 2-year period, which has worked out well. We're about a quarter of the way there, and we've been developing relationships along the way to make that easier. So a lot of groundwork has been laid throughout this year. So we're excited about that, and I think it's going well. Some other markets that I do want to discuss are, one is liability insurance, particularly liquor liability. So what we've seen is that the rates, and so the affordability and availability have seen difficulties in liquor liability market specifically. So if you are a bar or restaurant that serves alcohol for on-premises consumption in the state, and at least 50% of your receipts are alcohol sales, you are paying a lot of money for liquor liability insurance if you can find it. That is a very difficult segment right now. If you're at between 30 to 50% alcohol sales, then you can probably find coverage, but it's going to be expensive. And if you're under 30%, it's not going to be cheap, but at least it's there and it's available for the most part. And so we've been asked questions by the legislature. We've been asked questions by all kinds of stakeholders, whether it's the restaurants and the bars themselves, or patrons, the insurance companies, insurance agents. We've been hearing from different folks, and we are in the process of doing a data call. So we reached out to insurance companies and asked them questions, essentially, and said, hey, give us data on this so that we can analyze it. And so we're analyzing that, aggregating that data, putting it together for a report to address some questions that the legislature had in the spring. And we're hopeful that that can provide some insight. I'm always careful to say that we're not pushing for any particular solution or legislation. We're not crafting it. We are here as a subject matter expert. We are passing along information from the insurance industry to legislators, but we are not calling for any particular action. But there are some different things that are being looked at as options to help the situation. And so we'll see what happens. I know that that's coming up in the next session in the spring. Another topic that we hear a lot about is long-term care insurance. So this is a product that was introduced decades ago, and the actuaries that put it together, they made some assumptions on mortality rates and then also lapse rates on coverage. So how many people would live long enough to use the coverage, and also how many people would stick with it over the years versus pay premium for 10, 20 years and then say, I haven't needed it. This is an expense I can cut, and then let their policy lapse. And so those individuals pricing that coverage, those companies, they missed the mark quite a bit. And it wasn't necessarily known for a long time. And so that's compounded over decades. And we have seen where those products are underpriced by 200%, 700%. It just depends on the individual product. And so that is certainly a concern, especially for insurance companies that only wrote long-term care. And they've had a time with that, and they have significant rate need to make sure that they're around to pay claims. So whenever we talk about solvency issues with insurance carriers, this is right at the top. And so what they've done is they've filed for rate increases with the departments of insurance across the country. Different departments take different approaches. Ours is, if they file for a 200% rate increase, we review it. It may or may not be warranted. It generally is warranted, but we don't necessarily approve that full amount. Just like with the property insurers, we try to stair step them over time. So I think the largest increase we've approved over the last year and a half is about 25%, which is significant, but it's certainly not a 200 or 300% increase. And so we're trying to balance the solvency concerns of the company with affordability concerns of the consumer. And it's difficult. It's a difficult situation. Certainly nobody's happy about it, including us. But we are working on getting those companies rate adequate over time and working with them on solvency concerns too. We're also educating consumers on the situation. Last year, some legislation was passed requiring long-term care carriers to notify their policyholders whenever they make a rate filing with the department. And so they sent out these notices, and policyholders read them, and they become concerned because they see that they filed again 200-300% rate increase with the department for approval. And we get feedback from them as well as legislators on that. And we explained pretty much what I just said to this group about our process and what it looks like and our philosophy on those rate increases. Another thing that's come up a lot lately is pharmacy benefits managers. For those that aren't aware, those are essentially the go-betweens with your pharmacies and your insurance companies. So they manage the claims and the payments for your pharmacy benefits for your health coverage. And so several years back, we were, through legislation, given authority and responsibility over licensing of pharmacy benefits managers, which I will say are PBMs. That's what they're commonly called. So if you see that acronym, that's what it is. And so we've been doing that for several years. And this past session, we were given more responsibilities, more authority. And so we are now going to begin doing examinations of these entities from not just a financial standpoint, but also from what they do, how they conduct themselves. We call it a market conduct exam. So what are their practices? Do they have controls in place over things? Are they doing anything inappropriate? Are they not in compliance with a certain requirement? Or there's a statute or regulation. And so we're gearing up for that. We're hiring new staff. It's certainly been an exciting time for us, and we're working on that. We just hired a part-time pharmacist to help us because we know insurance, but I don't know pharmacy. I don't know prescriptions. We met with our new pharmacist a few weeks ago, and she was talking about something that I'd never heard of. And I turned to the person next to me that has been at the department for several years and said, this is why we hired her. This is great because I have no idea what she's saying. And we need that. We need that skill set and that technical expertise to help us as we embark on this. And so we're excited about it. I think it's going to go well, but it is a lot of work, and it's something that we've been focused on over the summer and fall especially. So those are just some high-level things going on at the agency. I know that there were some questions I'd seen, so I'm happy to take questions. I've got a lot of time for that. Typically, whenever I do a session, I find it helpful to hear questions so that I know what's out there, what's being said, what's being talked about, what people have concerns about, and then also just to give you an open floor so that I can get to what you want to talk about. With that, I'll open it up a little bit early for questions.
Yeah, Director Wise, this is Byron King. I'll monitor the questions. Some issues. We have a hotline where realtors can call in about issues. Obviously, the realtors are concerned about housing affordability, and obviously insurance is a key component of being able to make that mortgage payment every month. One of the issues that we've heard reports are somebody buys a house and then post-closing, the insurance company sends somebody to do a drive-by basically and take a photo of the roof or to evaluate the roof from the street. And then they notify the new homeowner, you need to replace your roof or we're going to cancel coverage. If there's a lender, they're going to force place insurance at a higher rate. Have you heard some reports of that happening? What are some of your concerns with that?
Sure. One in particular dealt with the South Carolina Wind and Hail Underwriting Association, that insurer of last resort that I mentioned. And so we've spoken to them and they've outlined their process to us. And so in those cases, whenever they send out an inspector, they send them out. They've got to make sure that property is not in disrepair or anything like that. And as I was told by the executive director and seeing their documents, they send out that inspector. And so if there is an issue with the roof, they ask that it be repaired, or they won't write their next policy period. So maybe they're 3 months into their annual policy, but they still have 9 months to get that addressed. And I know that the association will work with, and other companies will work with policyholders to make sure that they have adequate time, especially after a storm. If a hurricane or any kind of storm were to come through and damage the roof, if they don't replace it, then it's not necessarily an insurable risk. And so they would either, depending on the severity of the damage, they wouldn't be provided with a coverage option, or instead of replacement cost on the roof, they would be given actual cash value. But something that I think is important to keep in mind is the roof is so just integral to the structure of the house, and protecting the contents, protecting the structure of the house. So if it's in disrepair, it is going to be difficult. So if you have a storm, it could blow off a portion of your roof, it could create leaks, things like that. And so there are losses there that, regular home maintenance can help really address.
Yeah, great response. And one of the things we tell realtors is for residential purchase, there's a due diligence period where buyers could shop insurance, get a roof inspection, could be coordinating ahead of time to get ahead of this problem. So there's some good suggestions. I like the comment you made about there is time available for them to get those repairs done. So at least they have some time to handle that. Another thing we've heard recently, especially first hearing about it in the Hilton Head area, where there's owners associations, where there's a insurance cost increase so much that they have to run special assessments that run for multiple years. So what we've been telling realtors with that is our contract makes a special assessment the seller's responsibility unless they have an addendum to the contract where, say, maybe the seller handles the first year, the calendar year of the closing, and then the buyer's responsible for those insurance special assessments after that. So it's not really a question, but just to make you aware of that issue. And we have a form for realtors on the webinar, form 233. It's our insurance and flood disclosure document. That's a good risk management tool to have your buyers sign that up front. And Director Wise, another issue that's come up that you may or may not have heard of, title insurance. There's organized crime operating. They basically, it's real land. It's vacant land that's for sale. We've heard about it on the coast. Valuable land where the neighbors don't know each other, and it's common for the landowners to live someplace else. It might be beachfront or other valuable property, but the organized crime is creating a fake seller where they'll go in, figure out who owns the lot, create a fake driver's license, fake passport, and basically try to list and sell that property without owning it. Have you heard that at your department yet about the title insurance issues with fake sellers?
Not that particular one. So we have an insurance fraud unit that's criminal prosecutors that we have as our staff, and we have SLED agents in-house. So it's an agreement between the Attorney General's office, our department, and then also SLED. And so we started that up a couple of years ago. And so they take any kind of complaints, insurance fraud complaints, and they will investigate those. And so that's what I would say is let us know. Let us know what's going on if you have a fraud complaint, whether it's title, auto, whatever it is, whatever line of business, and we'll investigate that and see if there's enough there to move forward with prosecution, things like that. And so one of the big things we've had lately is staged auto accident rings, especially in Sumter County for some reason. I think we've had something 50 or 60 arrests within the last year or so just on those. But so that is something that I have not heard of yet, but I would certainly encourage anybody that sees something like that, tell us, let us know, because if we don't know, there's nothing we can do about it.
That's great
And then I'll
information.
circle back on the, sorry to cut you off, but I'll circle back on the HOA. So with condos, that is a segment of the coastal property market that is facing a lot of difficulty. They are having a trouble finding coverage, and it is very, very expensive. And so I'll have to give a little background for that, but I think it would be helpful for this group to know. So we did a couple of legislators reached out to us in Horry County last month, and so we partnered with them, and we did 2 town halls, and it was largely attended by individuals that live in condos, but then not exactly a stone's throw, but within a couple miles of the ocean. And so they had seen their insurance rates skyrocket, and their regime fees had gone up as a result, and significantly. I think at least one of them, their fees every month, they were going to pay an extra $1,200 a month for the foreseeable future. And so it puts them in certainly a tough spot. But just for context and background on that, typically these condos are, well, let me back up. So some of the things that are impacting their rates and also availability, the reinsurance that I talked about, inflation, property values, but they've also got an added factor in some things that have happened with condo buildings throughout the country. So if you look at some collapses recently within the last couple of years, Miami had one, Iowa had one. That's a concern for insurers. They view that as, okay, well, maybe this is riskier than we realized. So we're going to have a harder time either rating it or offering the coverage at all. And so with that additional background, so we have kind of three different areas of coastal property insurers, three different types. So we have what we call admitted business. Those are the ones that advertise on TV that you've heard about that we regulate. There's also the South Carolina Wind and Hail Underwriting Association, that market of last resort that operates. They offer a certain amount of coverage, but there are limits to that. And on purpose, we don't want them to be on the hook for a $100 million condo policy, but they offer up to $2.5 million for condo or for commercial business, and then 1.3 million for personal residences. But so there's an in-between layer called the non-admitted or surplus lines market. And those are carriers that are not regulated by the department. They serve as this fluid sector that's able to alter their rates or coverage or tailor it to a particular risk or building. And so they can operate very quickly, but on the downside, they're not covered by our guarantee fund and they're not regulated by us. So they certainly serve a purpose, especially for these risks that are just different from the run-of-the-mill ones that your big carriers are writing traditionally. And so those surplus lines carriers typically are the ones writing these condo buildings. We spoke with some that they have 10 buildings and have $10 million in coverage each. So they need $100 million in coverage. Extremely large amounts of coverage. And if a hurricane comes through and blows it down, then, you know, the next Hugo, then the insurers are on the hook for a lot of money. But so what we've seen is those condo associations actually have not been able to find just one insurer to provide all their coverage. They've had to partner with 12, 15, 20 different insurers to each take a layer of what we call a layer of the business. And so maybe the first $5 million is covered by company A, and then $5 million to $10 million, that next layer is covered by company B, and so on and so forth until they get all the coverage that they really need. And so it's really diversification by the insurance companies is taking, you know, a portion of this risk and a portion of that one. And so they build a portfolio like that. But so hopefully that provides a little bit of background. I'm sure there are plenty of agents on this call that you know, sell condos and are in that business. And so hopefully that helps you, helps y'all understand some of the background going on with the insurance and, you know, the authority we have versus don't have. And then just, you know, hopefully that information is helpful.
That's fantastic information. Yeah, those tragic, the Surfside condo collapse and the deferred maintenance. So we've been telling realtors is make sure you investigate all aspects of a condominium, the reserves, the maintenance issues, and then you can do that during due diligence. A question that sounds like it's in the wheelhouse, Department of Insurance. One of the realtors asked, how can I check my insurance carrier to make sure they are in good standing with the state of South Carolina?
Well, they should be in good standing if they're operating, but that we do have online our website. You can go and you can check the license of a carrier. You can check the license of an agent, just to make sure it's up to date if you'd like to do that. If it's not, please let us know. But the companies and agents are, you know, good about certainly maintaining all that with us. But we do license carriers that come in. We license agents. They have to go through an exam process to make sure that they know everything they need to know. I'm sure y'all can relate to that. And then they have continuing education. There is well, I think the realtors, it was patterned after y'all, but there is an exemption once you have, I think you're age 65 and you have 25 years or so of experience as a licensed insurance agent, you can be exempt from CE requirements. But so that's what I would say is go to our website. Again, you can call our Office of Consumer Affairs or Consumer Services if you have any issues or questions, or, you know, if the website is giving you trouble or anything, just let us know.
Super. Let's see, it talks about it looks like it's spelling difficult for me to read. Let me see. Going back to the roof issue where they do the inspector, realtor asks, what about the roof? It's say X years old. It's not in disrepair, but it is required to be replaced by the insurance company. So that's, I guess, any comments on that? I guess you're negotiating with your insurer. You're talking to your attorney to try to negotiate with the insurer on that issue.
Well, it depends. So some of them, they have, so we call underwriting guidelines. So what are their criteria for business that they're willing to write and that their program's set up to insure? Some of them really aren't set up to insure older roofs. Some of them are. But so what typically happens is the older the roof is, the more likely that it's going to have damage during a storm. That's what it comes down to. But so it depends on the company. We cannot mandate a company to be able to write all comers, or if your roof is under 10 years old, yes, write them. But if your roof's 30 years old, write them too. It's up to each individual company and the market. It just depends on what the company's risk appetite is essentially. And of course, you're going to pay more if you have an older roof, because insurers would say, well, that's part of home maintenance, is to make sure that that's up to date, just like anything else around your house. So it's something that I understand is difficult, but it's something that if we mandated insurers to write coverage, whether it's that or anything else, they would not come to the state to write if they didn't have that flexibility.
And one of the realtors was asking me about a comment I made about the kind of the Surfside, the deferred maintenance, insurance issues with the condo. So what we recommend is buyer agents recommend that the buyers hire people to investigate those. It'd be an accountant or a lawyer to interact with the owners association to check out the reserves and their management. That buyer agents typically aren't doing that, but they definitely should. All inspections, you want to tell buyers, hey, you need to get all inspections. You need to investigate insurance coverage, investigate the condo, deferred maintenance reserves, the management style, all that. Hopefully they're pre-offer during due diligence. Let's see about more questions for the director. There's a question. Have you heard anything regarding MIP for condos coming back? I'm assuming MIP, they're talking about maybe mortgage insurance premiums, perhaps.
No, I haven't heard anything specifically.
There's one here. Are there any updates on the premiums with condominiums? I've had multiple deals that have run into the issue of the HOA raising the deductible past the 5% mark, which disqualifies the property from getting a conventional loan.
So some of that deals with if they don't raise it, then the insurance company may not be willing to write it. So I know that they've had to adjust some of their policy provisions, like deductible, to just entice the insurance company to be willing to insure them. I know that makes other things difficult, but that's could be the reason why they're doing that.
Gotcha. And then one, a realtor is asking how they can, especially for a new realtor that doesn't know a lot about insurance, what's the best way for them to learn? My suggestions were research online, and your local insurance broker is probably more than happy to come and give sales presentations, either to you directly or to your whole office. Any other suggestions how realtors can learn about insurance?
I think that's the best way. I mean, unless they want to become a licensed insurance agent and want to take the exam. But yeah, I think talking to your local agent, they're always happy to go out. It certainly helps them from a business standpoint, but they're always happy to come out and provide information. There's also the Independent Insurance Agents and Brokers of South Carolina. That's a trade organization. And so if you don't know of somebody in particular, you can reach out to them, and they have agents throughout the state, and they'd be happy to set you up with somebody.
Here's what it says. Thank you for talking about admitted versus not admitted. Consumers do not understand this, and agents are not explaining. With these rate increasing fast, a lot of folks are turning to the non-admitted. It is going to get ugly if the public is not made aware.
It is difficult, and I know that there are questions, around that, and so we're certainly trying to get out the word and educate on that. And that was a big topic whenever we did those town halls in Myrtle Beach a couple weeks ago.
And then for realtors that are interested, perhaps hearing some of these town halls, is there a way they can look up your schedule for upcoming ones that maybe they could attend?
I don't have any currently scheduled, but yeah, the legislators in Horry County were the ones that put those on. So I don't know. I haven't heard of any others coming up in the future though.
That's a good point. So realtors, you can talk to your local association about maybe putting together a town hall on insurance. One nuance says we've seen carriers leaving the states of California and Florida. What is the climate in South Carolina for companies? Are we likely to lose any major carriers in the near future?
Well, I'm hesitant to predict, but I mean, right now all of our insurers that are here are in pretty good shape, and we've heard nothing about any of the major carriers leaving. We talk with them on a regular basis. One of the big parts of what we do is form those relationships with stakeholders, and certainly insurance companies are primary stakeholders in this. And so we talk to them. We have a very good regulatory environment in the sense of there's a lot of balance. Not all states balance things. We try to balance consumers and industry. Some states maybe don't do that. And so our climate is very conducive for insurers. We want them to operate here, be able to make a reasonable profit, and provide great service and great products to our consumers. So that's what we seek to do. Is ultimately everything goes back to the citizens of South Carolina, and we're here to serve them. And so part of that again is talking to those insurance companies, making sure that we can work with them. I talked about stair-stepping rate increases over time. The majority of companies have been understanding of that and worked with us on that front. And we certainly appreciate them doing that and being flexible on that.
Fantastic. And then kind of behind the scenes, how do you operate? I know you're a member of many associations, and how do you communicate with insurers in other states? Are there national conferences where you go and have meetings? Do you use Zooms? Do you communicate directly to some of these carriers?
All of the above. So our big our organization is the National Association of Insurance Commissioners. So that's all the heads of insurance agencies throughout the country. And then also DC and the US territories. We've got 56 in total that are represented. And so we have 3 national meetings a year, and then we have other one-off meetings. And we have lots of committees. There is a lot of bureaucracy, admittedly, but it's good. It enables us to converse and get a feel for what other states are doing. There are certain issues that nationally it makes sense to have a unified front. There are others that are state-based issues that states may not agree on, or they may not be a concern in one state, but a huge issue in another state. Liquor liability is one of those. We don't hear from other insurance commissioners. I've talked to them and asked them if they've had issues with liquor liability in their states. They've said, no, not really. It's not on their radar. But then long-term care insurance is a national issue where everybody is paying attention to that, great attention to that. And so it's really helpful to have those conversations officially, and then also in sidebars in between the meeting sessions. But so we do that. We have our Southeastern group that gets together as well. And then we certainly communicate with industry through those functions, and then also directly. So a lot of insurance companies have government relations elements, and so those are our primary points of contact if there's an issue or something we want to get their thoughts on, or anything that's relevant. We also have a distribution list on our website that anybody can sign up for. Now I might caution you, some of it's highly technical, so you may not want to get that in your inbox, but it's doi.sc.gov/notify me, or you can just navigate from the front page. But so companies sign up for that, and anytime we do a bulletin or any kind of informational session, or if we're collecting data from the industry, we communicate it via that. And then we also reach out directly to a lot of industry trade groups. I mentioned the independent agents and brokers. South Carolina, that's an example of one. There's the South Carolina Insurance Association, and there's others too, but those are just 2 of the local ones. And so we have a variety of methods. We meet in person, we meet via Teams, Zoom, on the phone, whatever it may be. One thing that we try to do is have an open door policy. We want to talk with anybody that wants to talk. And we may not agree on everything, but at least we know where each other stand. And that's important to us for all of our stakeholders.
Super. And then we have a question from the Columbia area talking about the floods in 2015. Says FEMA has classified a large portion of homes in flood AE areas. Is there a clear process to getting this removed for homes that are not actually at risk anymore?
Well, I can't speak to that since the feds, but I will say something that we say around here, and it's from my predecessor. If it rains at your house, you're in a flood zone. So it may be that you're not in a high risk flood zone area, but every spot has a risk of flood. We talked about the 1 in 1,000 year flood that hit Columbia, and I remember Lake Catherine, and we evacuated my house. I remember that, and it was a tough time, certainly for a lot of people. But one thing is just, we certainly encourage people to have flood insurance. Consider earthquake coverage too. Everybody has their own unique financial and economic situation, but we just, different people are more risk averse than others too, and that's fine. But just think through it is the big thing. Talk about it with a professional who can help provide guidance and advice on your situation. But so yeah, I would, while we don't really have any input, or I can't really speak to that process, it's just keep in mind that it can flood anywhere. And I think some people are under the impression that if they're not in one of those special flood hazard areas, then it can't flood at their house. But as we saw in 2015, and we've seen plenty of other times too, that's not the case. So just we try to educate consumers on that too.
Yeah, fantastic. I put into the chat, we're fortunate in South Carolina, we have a national expert on flood insurance, Lisa Sherrard. She has a consulting business. We've done some webinars. Her videos are on our YouTube channel. And I put her contact information for those Columbia issues about minimizing flood insurance on properties and changing status if it's warranted. Looking through the Q&A, it says, who does the owner report condominium management companies that fail to do preventive maintenance to? I would say local government, code enforcement. For the owners, they're going to be talking to their trial lawyers about enforcing the HOA rules. Any kind of comments on? She's talking about kind of the surf side where they didn't do deferred maintenance. Any other resources that you can think of, Director Wise?
I know it's not us, but I think beyond that, the ones you mentioned make sense.
Thanks. And then there's a question: what is the website that we visit to locate South Carolina insurance carriers?
So if you go to doi.sc.gov, you can navigate from there, look along the top, look for the insurance carriers, and there's a search function that you can navigate to from there.
Super. And I just put the link into the chat. I believe that's all. Let's see. I'm scrolling through to make sure I didn't miss anybody. If I missed you, I apologize. Please contact South Carolina Association of Realtors after the webinar at 803-772-5206, or you can email me, byron@screaltors.org. Director Wise, that looks like all the questions. Any closing topics? We do want to thank you for your time. This has been very helpful.
Well, I thank y'all. Thank you for what you do. I've certainly got a good realtor that I appreciate, and he's helped us with a couple of purchases and sales. And I don't know where we'd be without him. We'd probably be in the same place that we were living a few years back. But what you do is valuable. Thank you for your time today. If you have any questions, reach out to us. We're a resource. And yeah, thank you again.
Thank you for your time. There's one final question about recording. We're working, obviously Director Wise works with the government. He has to be careful about if he has permission for us to record and post. So we'll be following up. If it's allowed, we'll post it. If not, thank you for your time today.